Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on gregschnell.com as well as stockcharts.com. So today I want to talk about connecting with the 5G network. Lots of things going on there. Obviously, they're trying to build it out. When I rolled through the charts, I found quite a divergence between different types of charts that were being successful. So I think it's one of the areas that we could focus on and just see the gaps by rolling through a chart list that has 5G related names in it and just see where we want to focus our time and money. So with that, we're going to jump over into the charts, and I'm going to start with, these charts aren't in a particular order. There's not very many of them, but I think more importantly is understanding what is starting to work. And, I'm a big fan in starting to see a stock that was trending down, come down, test around the 40-week moving average, start to turn back up above both moving averages. The full stochastic is starting to turn up. So it's a strong name. It's coming down. The PPO is just resetting around zero. One thing you find out about strong stocks is they don't spend a lot of time with their PPO below zero. So when their momentum comes down to flat, they'll start to build speed again and make the next rise. And that's kind of the way Micron looks to me. It looks like it's setting up. So just to review what my indicators are as we go through them. First of all, the Scooter ranking is like a sports ranking for stock, and which ones have better price action right now. Let's call it more wins. And so they're outperforming their peers. Micron's currently underperforming, but I like it when it goes below 25 and then starts to work its way back up. That can be a very nice place to get on board. This is the purple shaded area is always the relative strength compared to the S&P 500. It's been downtrending. It's breaking that downtrend. I like it. The full stochastic is obvious. It basically measures where we are in the price range over the last 14 weeks. We're at the low end of the price range. As that starts to improve, then you kind of want to get on board, and that's what's happening right now. Volume and then lastly is my momentum indicator. I'm a big fan of momentum, and when it starts to turn up, really like that. Okay. Here's Qualcomm, and Qualcomm basically has been building this base, I'll call it, in between 120 and 140 for about 6 months. It looks to me like it wants to start to break out to the upside here. It's trading around 147 on Tuesday after the close. So this looks pretty good. PPO has started to turn up. Full stochastic's already getting back up to the high part of the last 14 weeks, but it can stay there for a long time. Scooter ranking is up around 30, so it's been kind of left for dead, and then all of a sudden starts to come back to life, and that can be a nice place to get on board. So that's, to me, this is a really attractive place to look at the name. Corvo, this is a really nice setup here with whatever, let's just pick 199 or 200. The stock keeps testing. It looks to me like it's ready to pop and break out to the upside. It's making higher lows ever since May, but it looks to me like we're about to finish this consolidation and really get going to the upside, so that would be nice. Xilinx Semiconductor, again, testing prior highs, trying to break out. So you see this over and over and over. The semiconductor names are all setting up here. This is the 150 level. Wants to start to turn and burn. That looks pretty good to me. PPO is starting to rise off the zero level, much like I described for Micron. This looks like a nice place to enter. Keysight Technologies, it broke out a couple of weeks ago over the 155 level. We're now at 166. It looks to me like its PPO momentum wave is still looking to head higher. I see no reason not to like it here. Apple usually does their hardware announcements in September and October, so we're getting ready for that. There was a big downtrend in momentum here. It started to break to the upside. The one thing I always am worried about Apple is the growth rate is down to 3%, but on billions and trillions, it matters. The stock's definitely trying to break out to the upside, and they got such a huge buyback. I don't expect the downside to be much. But again, they're trying to break out to prior highs, through prior highs, and if they can do that, Should be a good push. AVGO, Broadcom is the company name. It typically trades a lot like Qualcomm. Anyway, been building this sideways consolidation since February. This is $487. Over here is $495. Again, just real quick technical analysis without going through all the financials of the company. What do investors think of the stock? To me, it looks like it's getting ready to break out to the upside. The PPO momentum has been downtrending. We're right at the point where if it was going to start to cross, the histogram would show that. If we're to move into positive territory as it breaks out, that's just bullish. It would have lots of room to run. Again, we're getting ready for one of the biggest events in communications here, with the 5G rollout really starting to hit mainstream, and these stocks should probably enjoy the ride. NXPI Semiconductor, here we sit with a $215 stock. Again, consolidating sideways for about 6 months. PPO has been downtrending. Looks like it's getting to the end of that downtrend. Again, do you have to catch the exact low? No, we just want to get it when it starts to change from down to up, and getting that move probably as it breaks through 220 or 215 would be nice. It's trading at 210 right now. So this all looks pretty complementary, and again, having it the full stochastic bounce around 50, that's typically a bull market signal. This has been a pretty strong stock. You can see how the full stochastic stays above 50 the majority of the time. It's almost been 3 years, with the exception of the COVID low, that this stock has been running. So yeah, just have to like that. Really strong. Arista Networks, this one has been consolidating for 2 months here, continues to push and close the weeks near the highs, but it hasn't been able to break out yet. It looks strong. I think the one thing I would do is draw a trend line under here, and if it starts to break down and consolidate more, I'd let somebody else own it. Marvell Technology, $55 was the high. We're now trading at 60. Looks to me like it's just getting going. So if we were, let's just see if I can do this. No. I'll just click on it. And what I want to show here very quickly is you have a really simple setup where you've got a high in the stock. And what are we looking for? When somebody's willing to pay all-time price highs for the stock, and they have to be an institutional investor willing to push that up, that looks pretty good. Now, what we see is the stock was underperforming the S&P for a while. It's now on its 3rd month of outperformance and starting to break out to new relative strength highs, so breaking above the prior highs. When the stock starts to outperform the S&P 500, that attracts more investment. Because people who are paid, institutional investors who are paid to outperform, they have to be buying things outperforming. So this stock is just starting to get going, breaking out to the upside. The PPO momentum wave is on its way. Looks pretty good from here. So just some basic stuff, right? Your investors are willing to pay more for the stock. Who wants to sell it? It's a winner for everybody who owns it at this point. Okay. So moving on to the next page here, here's analog devices. Again, consolidating for much of the year between 150, 170, trading at around 168 right now, and a breakout above 172 would put it at all-time highs. That could do that in a couple of hours. Here's a downtrend on momentum. If that can start to turn back up again, that's probably going to rotate the stock. It's got a nice gentle uptrend following the 40-week moving average higher. I think as long as that holds, that looks pretty good. Dell Technologies, see this over and over. Here's another 4 or 5 month consolidation. Come down, the full stochastic pulls back, and now it's trying to bounce back up again. We want to see this momentum start to turn and stay up at a very high level. The stock's been nice and smooth to own. Trading at around $100. So if it can start to break out above prior highs here, you'd probably see this whole group turn up. Here's Texas Instruments. I've got a daily chart here. Let me just go change that back to weekly and save that. And the point I want to make here is it's been consolidating for 4 or 5 months. It was outperforming the S&P 500. It's on a bit of a downtrend now. If it could start to turn its way back higher, that would be good. Scooter rankings right around 50. You can see in general this stock has been behaving better than 50% of the large cap stocks for a long time now already. Going back, this is a 5-year chart. It's been outperforming pretty much the whole time. Scooter ranking rarely getting below 50, and when it does, that's a buying opportunity. We're sitting right down here now. I don't think there's any reason to change that when we know what's coming for 5G. So that looks pretty good. Let me just click back here. And then one more time. Okay, and here's Corning. So they make glass for the phones and that kind of thing. There was a downtrend going on here. It's just moving back above its 10-week moving average. Full stochastic coming down around 20. Looks like it wants to start to head higher. You're getting near the 0 line on the PPO. I like that. I don't mind it coming down to reset there and again start to work its way higher. We're trying to hold the 40-week here. And look at this. We built a 6-week base after a quick drop for 1 week. Can it start to turn higher? That's what we want to watch for. And as it does that, should make the next leg higher. I don't like the fact that it didn't do anything for the 2 years prior to 2020. So that might be one reason to shy away from the stock. Hewlett Packard, we've got a really big horizontal resistance level going back $16 on the stock for a while. We're down at 14. It looks like it wants to turn and burn higher. Here's the 20% level. Full stochastic just starting to get going. It seems to me like the hardware and the semiconductor technology areas are doing quite well in this whole 5G. Here's Skyworks, again, working up against, I'll call it a $200 price, just resistance layer sitting there. We're trading at 188 on this 3-year chart. PPO's just been oscillating gently. It's still on an uptrend, looks good, and they're active in the whole 5G. If this breaks out to the upside again, I think we get a good opportunity to get back on the bandwagon with this name. Here's T-Mobile after its big merger with Sprint. Quite an interesting view. It's been horizontal here for the last 3 months. I don't like that the PPO wave has already rolled over on this, so I'd probably let it come down and relax a little bit before I looked at that stock. TELUS, this is a Canadian name. Same thing, PPO is rolled over here, pointing down. It's trying to turn back up. I don't think we have to rush into any of these after we see all of the providers. So here's T-Mobile turning down, TELUS turning down. Ericsson, hardware provider, it's actually slipped below the 40-week and had a big gap down here. This chart seems to do that every 3 months. You'd think there was earnings or something, or every 6 months. So it looks like it had a big earnings report or some sort of a miss right here. It's not my favorite yet. It's not starting to turn up and work its way higher, so I'd probably let somebody else build the base. Comcast, it's been working up against this resistance layer, call it $60 all the way across here. I think when you see all of these stocks that are stuck at resistance all starting to pop, and I pointed out one of them at the beginning there, I'm trying to remember the name, but Cisco's another name we're going to come to that has started to break out. So that looks good. And then here's Viavi Solutions. Same thing, consolidating sideways between $15 and $17. Can it turn and burn higher? PPO is still trending down, but the full stochastic trying to bounce at 50. Again, telecom equipment, hopefully it can start to turn up here. Rogers Communications just went on a sell signal. This is another network vendor like AT&T or Verizon. Big uptrend here on the PPO going for a year. Now starting to roll over, so I don't think there's any need to rush into the stock. Google or Alphabet, that's been a monster. It just keeps trending higher. Huge volume last week. Stock holding up very well. It's just hard to add after it's already made a $1,400 move. Charter Communications breaking out to new highs here. Again, it's slowly edging its way higher from 650 to 750. But, just breaking out to new highs now, is that a problem? Probably not. Amazon had a tough report last week. I actually thought it would probably do better and break out to the upside. It's trying to find support at the 40-week here. I don't think the stock's going to go down a long way, but your PPO's rolled over just above zero, so that's definitely cautionary for me. Bell Canada, another network supplier, big uptrend here. PPO just rolling over. So to me, it doesn't look like a buy. I'd rather just let this momentum come in. Maybe it falls back for 6 months and we get a chance to pick it up a little bit lower. It doesn't seem to be, with all of these network providers rolling over, it doesn't really look like the place I want to be. Microsoft with cloud services and that kind of thing, you can see heading higher, consolidating for the last 5 or 6 weeks. Momentum still trending up. Nothing wrong with this stock, obviously. Ciena, big sideways consolidation in late 2020, big drop 1 week, and then really the stock hasn't done much since then. It would really need to start to break out above this $60 level to kind of get my tune singing for me. So that one would be a problem. Here's Verizon, always happy to come on the airwaves and report after earnings. I like the openness of the CEO, but you can see the stock hasn't done anything for 2 years. PPO sitting right at zero, gently downtrending below both moving averages. Although the full stochastic is low, we're just not seeing any of the network providers do well here. So to me, that's an area to avoid so far. If they all started to spark, that would be nice. Here's Cisco, and we can see they had a high around $55 back here. We're sitting over here the last 4 or 5 months consolidating in here, and it's just starting to move above, hitting new all-time highs or new highs for the stock on over the last 3 years. I like it. PPO is trending sideways here, not really up, but breaking out to new highs, that's going to turn this back up and look pretty good. So AT&T, another network provider, and again, I get it. They pay a large yield, but you're getting dead money on the capital. So just no capital gain here. Watching the stock trade sideways. So that's a real hard one for me to invest in. When I look at the contrast between the hardware and the network providers, you can just see that these network providers are either just rolling over, and here's an example of rolling over back in 2019. And they didn't know COVID was coming, but all of a sudden it was just gently turning down, and then all of a sudden COVID hit. So I wouldn't blame this part on just their regular business. But if you just ignored this drop, it hasn't done anything. It was flat before. It's been flat since. Really no need to own it unless you're happy with a 7% dividend. And if that works for you, cool. Here's Nokia. And again, telecom equipment. But this chart's interesting for a couple of reasons, right? One is when we start to annotate it up, it hasn't done anything. It's been a dog for a while. But when we start to show this breakout, the stock has been breaking out above 2020 highs. Now it's starting to break out above 2019 highs. And at a move through 644, we're going to be at, new multi-year highs. That would be a very nice place to be. We're going to be there maybe by the end of this week. So anyway, something's changing on this stock. It looks like obviously their hardware solutions are going to be working for the 5G. So that's one that looks totally different to me from what we've been seeing on some of the other charts. Cisco was another one that was breaking out to higher highs. When we look at VMware, again, the stock hasn't done anything for 2 years. It's currently on a bit of a downtrend. It's not horrible. I like the fact that the full stochastic is starting to turn up. PPO momentum indicator still heading lower. So are we gaining anything? Now, the idea behind these indicators isn't to pick the exact moment, but it's to give us an idea of trend. And what I like about the PPO is if it can bounce off around zero and start to turn higher, that would be helpful. We don't see that yet on the stock, and so it just gives us a general clue that perhaps we've got time to let somebody else make the turn for us. and we'll pick it up when it breaks this downtrend, starts to break out through the 10-week moving average. The full stochastic is trying to bounce here, which is nice. Nothing wrong with that, and could make for a reasonable entry. But the stock has been just kind of middle of the road, around 30%. Compared to all of its peers. So is that a reason to rush in? It doesn't stay up there very long. VMware hasn't been a top performing stock anytime in the last 2 years, up above that 75% level line. So I don't see any real reason to jump on it. That doesn't mean it's not a good company and all that kind of stuff, and it can't change. It just means so far it's at a trend for me, and I want to wait for the signals before I jump on this. Equinix, this one just broke out to new highs. It hasn't been able to really push up. It's a bit of an expensive stock. This is 829 over here, 829, briefly made 845 and is now pulled back, sitting in around that 829 area again. What are we at? 820. So it's struggling, trying to break out to higher highs. I think if it can do that, you probably want to own it. If it fails here, you want to let somebody else. PPO momentum is slowing down. It's not continuing to go higher. So again, just by looking at the whole group, I think the big thing we want to try and figure out is what's going on in 5G. And we've got some specific areas that are working. This one's real estate and diversified REIT. It's just kind of pausing here, so it doesn't really need to be part of the formula. But I've got it in here as a play on the 5G expansion, but it's not doing anything yet. So we might as well just let it rest until it does start to change. Intel was one that in March I thought it was going to break out to the upside and really start to pop. You can see I've been wrong. PPO is still declining, heading down below zero. There's no reason to own it yet. If it was going to start to turn the corner, and again, they've got a new CEO who's trying to change things up. But look at this resistance line way back here. Just grab that, annotate, and we're going to take this line and just extend it over. I mean, it was interesting when it was breaking out back here. It's not interesting when it's coming down, just testing this very clear support, then resistance, support, resistance up here, support for above that, and then resistance. So we're right at a key level for the chart, but until it starts to really give us a clue which way it wants to turn, if the CEO can actually turn the boat around, and this is a big ship to turn around, it doesn't happen quickly. But if he can get it going, that would be a very interesting place, a bounce off that support. Crown Castle, again, a diversified REIT, has been pushing up, pulled back in the last 2 weeks. You've got a PPO sell signal, so it doesn't seem to be a reason to rush into it. Just let it come back a little bit and give it a chance to kind of keep working. Here's Digital Realty Trust. Again, same thing, trying to break out to the upside, another industrial and office REIT, but the PPO looks like it wants to roll over here, so not really a continuation of the uptrend. So that would be something to be cautious of. Alibaba, very clearly a whole bunch of issues around this name in terms of the Chinese government getting involved in regulating what they're doing. So it's been on a bit of a downtrend. I don't find any reason to try and buy it down here on the dip, assuming it's going to go higher. We'll let somebody else build the base, and once the PPO momentum starts to turn up and move higher, perhaps we can get on board then. Here's SBA Communications. The chart broke out above this $320 level. It's now trading around $340. Still looks nice. It looks like it's just gently making its move into the uptrend. I don't see a reason to not like it. The scooter ranking just went above 75, and it can stay up here for a long time, 3 months, 6 months. So, and it's just breaking out. So I kind of like that chart. American Tower, I think we all know what they do. They put up the towers for the telcos to hang their equipment on. Horizontal resistance was 260. We're now trading at 300, and we're just kind of sitting up against there. PPO's at the high end of the range. That might be the only thing to be concerned about. But I do like the fact that it's been outperforming the S&P 500. I don't want that to start breaking that trend line. And I do want it to see it get back above the 75 level and be one of the stronger performers in this large cap group. And lastly, I've got Texas Instruments. What we see on Texas Instrument is that sideways consolidation we've seen on many of the semiconductors. Hasn't really been able to break out to the upside. As soon as it does, I think that's probably an attractive entry. So if it could start to break through 195, that would be a pretty good place to go. If you've tried some of these stocks, one of the things you can do is you can set alerts. So you just go to the stock charts homepage and set your alert for TXN breaking above, let's say, $200, and have it send an alert to you. When it does that, you're going to get the chance to really follow along. So by looking at the whole group, I think in summary, we have semiconductors looking well, or at least holding up. All of the network providers are rolling down right now, so there doesn't seem to be a real need to jump into those. Hardware vendors like Ericsson, Cisco, Apple even, some of those, they look pretty good. Obviously, Google for the software for the 5G phones. They'll also be there with Android. So there's lots of different ways to play it. I would just say semis look great, hardware looks good, network providers don't look as good. Okay, in summary, and the REITs don't look great either. In summary, the overall market is trying to rally here. NASDAQ had a pretty good push today, up 0.65. You can see it's still trying to break out from the highs of July 26th. A little bit of a downtrend here, trying to break through that. Nice push to end the day. On the daily, we've been, let's call it a choppy July, right? It ran up, that 3-day pullback, and then ran up. Hasn't been bad. It just hasn't been, I'll call it smooth. Now we've got an uptrend line that we're starting to test. But the market seemed fine on Monday, Tuesday, holding in there nicely. If there's anything I can help you with, you can go to gregschnell.com and look around the website. There's some free articles there. I do the Market Buzz with stock charts. I recently did the pitch with David Keller. I've got a Your Daily 5 coming out for this week. So there's lots of different work that I'm putting out with stock charts. And if you're interested in any of it, feel free to view it there. If you'd actually like a subscription to gregschnell.com, you can slide over there and go to gregschnell.com/explore. That'll give you a 2-week free trial, and you'd save 40% on a new membership as it hooked up. So hopefully there's something there that interests you. I think I offer a relatively unique way of looking at the market. So I try to give you a big general overview of the globe, narrow in on the 4 different asset types: commodities, currencies, equities, and bonds. And take a look to try and follow themes rolling through the market. And recently we've been picking up on the uptrend in some of the material stocks and the gold stocks. I'm currently looking for an uptrend to start in the oil names after the big pullback. So anyway, if that kind of thing would interest you at all, there's so many people covering large cap tech. I don't really spend a lot of time on it. So if you're looking for large cap tech coverage, I'm not your guy. It's not that I don't look at it. I just focus more broadly on a lot of the other stuff that I'll call it swings in and out, can run up nicely for 6 months, maybe a double, and then pulls back, and we just want to leave the party when it starts to roll over. So anyway, thanks for taking the time to join me on Market Buzz. Market Buzz airs Wednesdays at 10:30 a.m. Eastern. You can also see the recordings on the Stock Charts TV channel and Stock Charts on Demand. So again, thanks for taking the time. Hope you're enjoying your summer, and we'll talk to you soon. Thanks, everybody. Bye-bye.
Hey, Grayson Rose here with Stock Charts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.